In today's video, I'm going to teach you how to use Flux Charts Price Action indicator in Tradingview. Start by opening Tradingview on your browser or app. At the top of the chart, click on Indicators, then use the search bar to type Price Action Toolkit Flux Charts. From the results, select the official Flux Charts indicator. This is a paid tool, so you'll need to complete the purchase or have an active subscription to access it on your chart. Once added, the indicator immediately handles core market structure analysis for you. It automatically marks swing highs and swing lows. And it highlights structure breaks with labels like BOS, which stands for break of structure, which stands for change of character. These markings help you quickly understand whether price is trending or shifting direction, without manually drawing every level. In a bullish market, you want to see price break above a previous high. That break signals continuation of upward structure. In a bearish market, you want to see price break below a previous low, indicating continuation to the downside. Wait for clear breaks and use the levels the tool provides to avoid guessing. Flux Charts also plots high-fay interest zones automatically. Order blocks are highlighted to show areas where larger participants are likely to have placed significant buy or sell orders. Fair value gaps mark imbalances in price action that price often revisits. Liquidity zones point out key monthly and daily highs and lows, where many stop-loss orders tend to rest. These areas can act like magnets for price and often guide where reactions might occur. Before entering any position, check the market structure dashboard built into the indicator. It summarizes the current trend bias. Only take buy positions when it shows a bullish trend, and only take sell positions when it shows a bearish trend. This simple filter keeps your trades aligned with the prevailing structure and helps you avoid fighting momentum. For risk management, set your stop loss near the relevant order block or liquidity zone that would invalidate your idea if price returns there. This keeps your risk precise and logical. Then, use the projected future targets that the indicator provides to set your take-fay profit levels. Planning exits around those targets helps you capture moves that the tool expects while staying disciplined. That's all to it. Thanks for watching.